Silver's been a hot trade, too, up 67% this year. But to Josh Brown's point, today's silver finally passed its 2011 high. Still hasn't gotten back to its all-time high set in 1980. So are metals just having some temporary shine, or has something permanently changed? Joining us now is John Ciampaglia, Sprott Asset Management CEO. Sprott has several ETFs focused on gold and silver. John, what do you say? Is it different now with gold? Is it going to double maybe again over the next 3 to 5 years?
Yeah, well, gold is obviously having its best year since 1979. And what gold is doing this year is not typical. It is not designed to go up 50% a year. And even last year was up about 25%, and barely anybody noticed. And I think it's important to reflect on what signal the price of gold is sending the market. And it's basically a lot of uncertainty, a lot of risk, and some concerns about things like the dollar and U.S. Treasuries and U.S. T-bills, which have obviously been the reserve asset for many decades. And whether it's foreign central banks or individual investors or institutions, there's clearly some substitution going on between treasuries and T-bills and gold. And it's not so much people leaving stocks. I think it's people replacing their typical allocations to bonds and instead going to physical gold.
And John, how much of this might come down to the difference between the way a Ray Dalio or a Jeffrey Gundlach invest and the way most people, even relatively high net worth people, invest? I mean, it's bad for most people to get in and out of trades frequently or in large amounts. Dollar cost averaging, having a set strategy tends to make more sense. Is that part of what people should keep in mind when they're considering how much gold to hold and for how long?
Yeah, I mean, we've been advocates for gold since it was $250 an ounce. So we've been, kind of beating this drum for a long time. And our view is obviously it's the ballast in your portfolio. It helps you stay invested in other asset classes. It historically has been a safe haven currency alternative when things in markets become dislocated. And obviously we're in a period where a number of different markets are unsettled. And so we always view it as a long-term strategic holding. It really depends. 5 to 15%, I think, is a reasonable amount for most investors. Obviously, we see central banks in the world moving their FX reserves to targets in that range, some even higher. And we think this is a part of a long-term secular trend. And it's interesting that institutions are starting to mimic the central banks in terms of moving away from treasuries and T-bills to physical gold as a safe haven investment.
Yeah, we keep hearing about de-dollarization and also this idea of a debasement trade, to your point, and how all this is fueling gold. I'm curious what you think of the moves we've seen, not only in silver, which seems to be playing a catch-up trade here, but also more recently platinum and even perhaps now palladium.
Yeah, we've seen big moves in platinum, breaking out a multi-year kind of trading ranges. It's very bullish. I think the platinum story is obviously more about shortage. We had very sub-economic prices for a very long time, did not encourage any kind of platinum mine development. These are very old mines, and there's just a natural scarcity to these metals. Silver is obviously a bit of a hybrid metal, being part monetary and part industrial in nature. And silver, as you mentioned at the beginning of the show, is finally starting to approach its recent high from 2011. We think silver is clearly in the midst of a catch-up trade, and we think it has a lot more room to go.